It's Tuesday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Andrew Cox is going to give us a shipper update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Tuesday carrier update presented by PowerFleet. I'm Zach Strickland. So we're watching our tender rejection rates start to settle down. So for the fourth day in a row, we're seeing this blue line right here, the National Outbound Tender Rejection Index, fall. Now it's not falling rapidly. It's essentially kind of settling down off of a peak value of roughly 22%. And right now we're sitting around 21.68%. So it's not a huge decline by any means, but the fact is that we have 4 days, which makes a trend. And so a trend that's going down means that we are starting to see things settle a little bit. Now, on top of that, I have our van outbound tender rejection index for the United States in pink, and the reefer rejection index in green. And you can see they're moving in diverging directions. We're watching our van rejection rates, which is the majority of our outbound tender rejection index, and of course the majority of the trailer types moving across the country, starting to fall down now. Again, over the last day we saw some settling, more significantly so, but the reefer rejection rate jumped all the way back up to 27.79%. So reefer capacity continues to be challenged. Van capacity is still at a very historically high value of tender rejections, and of course the outbound tender rejection index for the United States is still very high. Up over 20% is definitely not a sign of stability in the United States. When you have 1 out of every 5 loads being rejected by the carriers, there is still a lot of spot market activity out there to be had, a lot of upward pressure on rates. Time will tell to see how far and how long this is going to persist. It looks, it's still a long way from what we were looking at in 2018 when we saw a bunch of rate increases and everything move in bid season, et cetera. So we've got a long way to go for that, but it is not necessarily just a little blip on the radar anymore either. So rejection rates continue to be elevated historically, although they are starting to come down a little bit, especially on the dry van side. So looking at the vans, it's kind of a mixed bag. Now, overall trend obviously is slightly down, but we have all our regions here pulled out, the Southeast, West, Northeast, Southwest, and Midwest. Midwest hanging in there, a little flat right now. That's our largest area of the country for capacity in terms of geographic region and also freight volume. Sitting it's plateauing right now, about 21%. The West Coast actually had a little jump up, but the Southwest is now starting to show a little bit of contraction. And I'm going to point out where those are right now. Weighted rejection index here, combining volume with tender rejection weekly change. This is going to give us an idea of where in the country the markets that are driving some of these tender rejection rates up or down. The most significant ones are going to be highlighted in red and blue over there. The red, of course, is going to be the markets where we're seeing declining tender rejection rates, therefore loosening capacity. Blue is going to be that tightening market movement. Twin Falls continues to be relatively elevated. Last week or so has been that way, continue to do so here over the next little bit. Knoxville, Tennessee out there is, sticking out like a sore thumb over there in the southeast. And then you see Houston right here. Houston is now in the red. So Houston is probably one of those southwestern markets that's really driving the tender rejection rate down. Capacity is loosening out there slightly, not tremendous by any means, but it is a pretty good downgrade. So don't expect as much activity out of Houston as you did this time last week, for instance. So some of the strongest movers, Twin Falls, Idaho, as we mentioned, Pendleton, Oregon, right next to it, Knoxville, Tennessee, all showing pretty significant weighted rejection index values, as indicating that we are seeing a pretty big jump in tender rejection rate over the last little bit. Knoxville, Tennessee, real quick. Knoxville, Tennessee, decent sized market sitting over there right next to the Smoky Mountains with the University of Tennessee, Knoxville sitting right there. We're seeing a pretty strong increase in tender volumes coming out of Knoxville, Tennessee, which is tightening capacity quite rapidly. We've got our outbound tender rejection index for Knoxville sitting right there, and you can see almost a 200 basis point move upward, 32.15% on the tender rejection rates, very tight there. All lengths of haul showing some form of increase, so it's all over the board. Anybody wants to head into Knoxville, Tennessee and try to find some heated spot market activity, they probably should do so today. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your shipper update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Anthony, we're going to talk a little bit about motor vehicle sales. We just got this data, I think, at the end of last week. This is coming to us from the Federal Reserve. Again, we had another strong month. It's a strong recovery from that month of April. That was at our low, looking at 40% down year over year in April. We've had 3 consecutive months of growth. I believe month over month, it was about 11% up from June to July. So another strong month, but we remain pretty far below that pre-COVID level.
And as you mentioned, this is a pretty consistent rise here. So one of the areas that's been going month after month, and so definitely an optimistic sign. And one of the things to note is also this is a consumer-facing trend. So looking at this is definitely indicative of more strength on the consumer side of things, something we've seen, I think, over the last few months, right?
Yeah, we've talked about this a lot. We've talked about how services have been unavailable to people. People have shifted their spending to some durable goods. While, a car is a big expense, not everybody has gone out and rushed out to buy a new car. That's why we see they're still below pre-COVID levels, but we have seen durable goods demand be well up in the high single digits or in the low double digits year over year for the last few months now.
And so when we're looking at motor vehicles, as you mentioned, there's a divergent trend between those goods and services. Mm-hmm. This is definitely on the good side of things, durable goods, so things that have a lifespan of 3 years or more. Right. But what does this mean, especially for transportation? And I know this has some implications for different parts of the country, is that right?
Yeah, no doubt. We know that our automotive production is highly concentrated in the country. In the Rust Belt, Michigan, I think 1 in every 25 workers works in the automotive industry, so it's a very big industry in that area. So I took 2 of the biggest markets that cars are produced, is Michigan and Ohio, and you can see that they are really benefiting from this rebounding demand, this recovery in the motor vehicle sales. So you see back here in our bottom, same as the rest of the country, they were a little bit even later to recover. These Rust Belt areas, they were later to recover than the rest of the country, but have been really strong off the bottom. I believe in the 40 to 50% range, up in a 6-month period since the middle of the pandemic. So these jobs have benefited from the recovery. But again, we got some murky waters ahead.
Right, and when we're looking at this, you've pulled out some specific areas. So you have here Ohio and Michigan. I think this is kind of indicative of what we expect, I think, in any kind of a recovery, that it's not going to be even across the board here. And I think this kind of pinpoints, even within manufacturing, not all manufacturing segments are going to be treated the same here, because some of them are going to be more consumer facing, as automotive here, while some that may be capital goods expenditures, the demand might not be there. But we are definitely seeing more demand here. And I think this piecemeal recovery is something that we might see throughout the remainder of the recovery. Is that right?
Yeah, I would definitely agree. If you're Whirlpool or any of the appliance manufacturers, you're sitting pretty nice right now. You've seen, if we look at that Bank of America data that I always reference, the home appliance sector is up 30% year over year. So depending on where you are in the manufacturing industry, you could be well positioned. But cars, we'll talk about some of these key takeaways here. So the first one here is that we have rebounded for 3 straight months. That's good. But we remain 13% below the 2019 level or the pre-COVID level. It's a very steady, motor vehicle sales are very steady. So you can use either. And really the biggest one for me is that it's hard for me to make a case that we're going to continue gaining on last year's numbers. I think we're going to go sideways from here. I see that it's going to take a lot of incentives to get people to buy cars moving forward. If you look at all of the motor vehicle companies in the world, I think there was only one, and it was Tesla, that had positive year-over-year sales for the second quarter. So again, everybody's really struggling, and it's going to be hard to make another case. And then another thing that clouds the picture here is that inventories are at an 8-year low. I think it's only 6.5%. They're 6.5% below last year. So with low inventories, some of these production numbers are simply trying to refill demand, and it just kind of murks the picture of what we're going to see on the recovery side for the rest of the year.
Excellent. Andrew, thank you so much. Insightful as always. And thank you so much for tuning in. That's going to do it for this Tuesday edition of FreightWaves Now. As always, you can find us on our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.